So from last year, if you see, I visited several time RBI, MCA. They always say that today ROC is busy in money laundering risk assessment, which is carried out nationwide, and there are so much government is asking. So the last year, so much work done by RBI and financial other government offices. And finally, if you are aware, that announcement came also that RBI is considered as one of the best bank also, right? So India's standard in terms of AML practices are now very matured, and the target is just to inspect the NBFCs is on the basis of AML side only. So that's why if you see that uh, they have in the later on slide, you will see that many penalties just came on the AML KYCs. Either the company are failed to assess the risk profiles, means they have given the loan, but they are not taking the profile like that from like I'm working in my company though, then they are not asking that where you are working or where you are staying. So profile needs to be created for the risk evaluation. So this was the one of the major drawback, from a lot of NBFCs. And these, I'm just sharing also you that this is a crux of annual report. So source is with you. You can also study in detail if you inability to comply with the AML KYC guidelines, insufficient policies, procedures are found in the NBFCs. Then they have mentioned these in the reports. Then the weaknesses they have found in the customer identities, and lack of systems available for the monitoring of transactions, red flags. If a loan is taken by me, but Sumit is paying on my behalf, why Sumit is paying on my behalf? So that monitoring of transactions required at NBFC level. So customer behavior, from suspicious activity side, always looked upon, and a transaction monitoring committee also required, which should be comprised of principal officer, designated director as per PMLA. Then you can monitor those transactions with the FC. So regular review required, insufficient trainings. I have seen many legal counsels or practicing professionals are giving trainings on POSH, but no one is offering trainings on the AML sites. And there is a huge opportunity that you can be the good trainer, being a compliance officer or legal counsel, or practicing professional associated with the NBFCs. Because nowadays like if I will say that in AML laws there are four pillars. Pillar one, customer identification, customer acceptance, and risk management and transaction monitoring. So on quarterly basis, for the four pillars, four trainings can be given. So likewise, there are n numbers of queries came from the inspection reports, and that's why if you see October 10th circular, I believe RBI now came out with internal risk assessment guidance note, that basically professionals how they need to conduct the risk assessment of the money laundering and terrorist financing. So they have pretty well explained, like we do secretarial audit, internal audit, statutory audit. So first time this came on the basis of financial action task for recommendations in India, that they have now defined the process, whole process. And these processes were earlier defined under the Basel norms, international norms, but that were not in the RBI guidelines for the NBFCs or for the banks. But now they have specifically mentioned this guidance note is now visible on the very first page of RBI website. If you want to start those audits or with the help of that guidance note, you can do for that particular NBFCs. That is not a tough job. It's very simple. You can just create a checklist of PMLA rules and RBI guidelines, and against that you can check the controls in form of maker checker, which is always available in the compliance tool. And similarly, you can around those checklists, you can define the processes, and then you can say that there is a risk because this is a manual control, there is a no risk, this is because this work is done in with the help of systems. So you just use those guidance notes. I think this is a, now earlier was a gray area that how to be conducted, but now it's clarified. And now the next year goal is already defined that they will now focus more on the information security side. So IS audit framework they want to see, data governance framework, data cycle they want to see in the inspections. They want to analyze the data quality index also of the returns. So every returns now is for filed on the CIMS portal, DNBS 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13. So all the DNBS returns now available in new formats. Then those basis of those format, they can analyze the quality of your business and your numbers. And they are more now work from their office. They do not want to come and sit and say hi, hello for the next 7, 6 days. But 1 or 2 days they will come, but they will not come for 6 or 7 days because they will take now help from the MC also because they will have launched one program Utkarsh. So under Utkarsh, they will get insights of your company from income tax, MCA. So that is a goal of Department of Supervision for the NBFCs for this year. And next year agenda are very clear that if you are in digital lending and if you are having a digital lending app and you are lending service provider and you are providing services to many NBFCs, then behave like as an insurance aggregator. Means if you want to buy in a one policy, so seven option will come that I will means this max life insurance will pay you pay 5,000, they will provide you the motor insurance. So similarly, is any digital lending app or lending service provider using any platform, then they should act as a web aggregator. So those draft rule always already circulated, but the nuances are like that. In loan, such offer cannot be given because we need to assess the income also. And for assessing the income, NBFC need to hit CIBIL also. So for just if you want to see offer from seven NBFCs regarding the loan interest rate. So you have to provide consent to different NBFCs through digital lending portal. So 7 times they are hitting your CIBIL report. So your score will go down. So these are just draft regulations, but a lot of maturity required, a lot of revisions required, a lot of interactions already happening through Digital Lending Association of India, DLAI, and NESCOM and others, lawyers, councils, compliance officers giving their opinions. But let's see when they will come with the final regulations. Now they are now what they are harmonizing the interest rate also. In subsequent slide I will show you that fair practice is required. Fair for charging fair rate of interest, penal charge percent 50%. So they will soon come with a good uh, regulations that is already done. Earlier we used to see compliance section 178, 179, 177 for for the committees. But now for the governance also, RBI is now defining their own standards, own charters for the committees, on terms of references soon. Prior approval required. You know that whenever any director is changing in the NBFCs, then if he is going, one is exiting, one is coming, and then the approval is required because there are only two directors now. One director is resigning, one is coming, so change is more than 50%. So now they are revising it and thinking because these approvals going in bulk, maybe they will increase it to 50% or somewhere they will freeze it. Draft regulation for the connecting lending. So this regulation was much awaited because that is in a story of Religier also. I'm just quoting for the you can check the for studies and academic purposes only, and and on the basis of report available on the website or the internet. Uh, in 2016-17, there are a lot of story. If you want to learn more on the NBFC side, I will say just search Religier investment. There will be n number of case laws or n number of regulations you will see on the website. RBI inspectors inspected and highlighted that loans are given to the related parties. That is connected lending, means highly influential people are connected to the NBFCs and they are influencing that and expecting financial support from those NBFCs. So that's why new circulars are coming for connected lending also. Similarly, for the securitization, I told you that asset reconstruction company you can hire. If your loans are becoming bad debt in your book, then you can transfer to ARC. So similarly, securitization also works. A special purpose vehicle will be created, and that special purpose vehicle will take money from the investors and give it to the NBFC, and NBFC will transfer those loans, receivables, or amount whatever need to be collected in favor of SPV, and SPV finally pay out to the investors. So this is securitization of the stressed assets. So current guidelines 2021 is not sufficient. So that's why now they are now giving more weightage to these securitizations of stressed assets guidelines, and they will come with that also. Next is consumer protection assessment matrices. I have seen, and even you also got an opportunity to attend several ombudsman, nodal officers conferences of the RBI. After that particular, if you see every time they circulate the action items, right? That whether company are fairly doing business, complied with the practices or not. So they are taking feedback at each and every conference also, and through complaint management system also, that portal. And they are assessing that whether NBFCs are fairly dealing with the customers or not. So this is a very risky area now, that they are not earlier they are very relaxed, but now they are very stringent on the fair practice code guidelines. So that's why they are thinking of developing those indexes also for publishing it. Impact assessment, enhanced risk assets, risk weights. So November 16 they said that if you are providing unsecured loan, so that unsecured loan is your asset, and against that asset a risk will be assigned, and on the basis of that risk the car will be calculated. So capital, and again is an terminology. The tier 1 or tier 2 capital are basically I think I should not touch upon this topic, but one day we can cover these returns and these prudential norms also related to calculation of tier 1, tier 2 subordinate debts, and how to assign the risk against each of the assets.
Welcome to COMPLINITY Technologies. COMPLINITY is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. COMPLINITY is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000+ laws and 24,000+ compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose COMPLINITY every time. Join the most innovative and prestigious brands that use COMPLINITY. Automating your compliance management. Request a demo at complinity.com.